Hi, everyone, and welcome to the Technocratic Podcast. Today, our guest is CJ Gustafson, founder and editor of Mostly Metrics. Mostly Metrics is a financially focused newsletter that I've loved for the last 2+ years. It's been tremendously helpful to me being in private equity, but I want to let CJ give his own introduction because he's done a lot more than just Mostly Metrics. So, CJ, take it away.
Well, first off, thanks for having me on. And I can't believe you've been reading for 2 years. It's like I sometimes I'll press publish on something and I'll be up in my attic and I'll be like, I hope somebody's reading this. So that's
Oh,
very
yeah, man.
kind of you. But
Absolutely.
yeah,
It's
I'm
just a
I'm a
great
tech
name.
CFO by trade, and I've been writing online for 4 years. Newsletter's called Mostly Metrics. It's from the perspective of a CFO, but it's really for anyone who wants to optimize their business model. And then you either I guess, die a newsletter or live long enough to see yourself become a podcast. So I have a podcast too called Run the
Right.
Numbers, where I interview CFOs and the
Yeah.
investors that fund them. And then, one
Nice.
newsletter wasn't enough. So I also started one called Looking for Leverage, which is specifically focused on, the financial opportunities of running a company in the private equity world.
That's really cool. That's awesome. Yeah, so plenty of resources that CJ is offering. And today, CJ is going to help us dive into just focusing on the financial side of a CTO's work life. And just getting right into it, CJ, one of the biggest questions we get from our audience is, first time CTOs, how do they build a relationship with their CFO? Maybe they haven't been responsible for the financials in the past for the technology department. Oftentimes, technology is the number one or number two biggest budget in an organization, and now they're in charge of that budget, a huge responsibility. What are some of the steps you think that a CTO should take to start getting to know the CFO and starting to work hand in hand with them?
So the first thing is just asking, hey, can you break it down from your perspective of how this company makes money? Which to some people, like it sounds like a really simple question, but even if
Mm.
it's and like it could be anyone who's entering the company, the first thing I do is ask them if it would be helpful if I explained how we monetize, because
All right.
I think that permeates throughout the product and it also impacts who you want to hire to build said product, and how we can fund the roadmap. So like as
Yeah.
a CFO, my job is essentially resource allocation. I know like we kind of split the world into a binary, kind of like these binary boxes of either you accept money from people or you're the one who's investing it. I think the CFO has both jobs where it's capital allocation, resource allocation, and a lot of that, which you just hit on, Bobby, is hiring. So knowing how the company makes money, and then I think discussing with the CFO, like, what's your perspective on like the current roster of people we have now? Do we have too many people? Do we not have enough
Yeah.
people? And like, how can we talk about like getting through like figuring out the gap between like where we are now and where we want to be, by
Yeah.
hiring the people to build the product.
Yeah, exactly. I remember when I first became a CTO, luckily I knew what the business model was already, but what I did working with my CFO was a lot of what you're talking about, like understand the organization really well. Payroll's like a huge chunk of the budget. So who's doing what? How much are they getting paid? What comp levels are they at? Does that all that make sense? And then if you're a first time CTO, also you're thinking about like, all right, where's all of our licensing costs going? Like AWS, all sorts of other technology licensing stuff. Just getting a handle on the basics of the budget is like so vital, right?
Yeah, and if I could like give, it's almost like a public service announcement to CTOs out there. The most critical thing for me and you to figure out is what belongs in our cost of goods sold, because that determines what we call our gross margin. And so if you think of the profit and loss statement, up top you have the revenue and then you have the cost to serve the customer. Then after that, you have the operating expenses, which the majority of the CTO's headcount will go in. But the CTO is directly responsible for how much goes into things like cloud cost, to APIs, to data feeds. And those are things that will drag down our cost to serve the customer. And I care about that, and the CTO should care about it too, because our valuation is predicated upon what we call the operating leverage in the model. And that's
Right.
largely determined by, hey, what's our gross margin here, which is your revenue less your cost of goods sold.
Right. That's a great little primer on some of the like nomenclature of the financial world that a lot of tech people may not immediately get, like cogs and things of that nature. But going back to one thing you mentioned is very quickly you get it to be a CTO. Now you got to definitely get a full grasp of the business model. Like, could you kind of break it down between like SMB versus a mid-market company versus a large enterprise? How long should it take for a CTO to learn the intricacies of the business model? Are we talking about like for a mid-market company, should it be just like a handful of weeks with the CTO and bam, they've got it? Or does it take, I've seen people take like more than a year to learn it sometimes, you know?
I think especially if it's a business where it's like a marketplace model or a fintech model and it's more than two parties involved, that can take a long time because money's flowing all over the place. And a lot of time that has to be transferred by the product. So you do
All right.
require some financial acumen. But like I think it depends less so on the size of the company and more so the sector that you play in. Like if
Okay.
it's a simple enterprise B2B SaaS model and you're selling contracts to companies for $100,000, $200,000 a pop, and they pay you up front, like to me, that's a
Yeah.
beautifully simple model. But if it's like a three-sided marketplace where sometimes you have suppliers who are selling on the platform, other times you have manufacturers, there are
Yeah.
different rebates. Like that's where I think like even from a financial perspective, I've come into companies and been like, I thought I was going to get this in 3 months. I have to actually live some of these transactions from
Right.
like the start of it to the end of it and go through a
Yeah.
couple quarters to understand when we collect money to fully grasp it.
Yeah. So it varies a lot by the complexity of the business model, not necessarily just the size. And do you have like a rule of thumb of like, I see a lot of VPs of engineering and CTOs, first time, folks, and sometimes even 2 years in, there's missing pieces of the business model. How can we Is there some kind of boot camp that they can go through that like helps them to learn it? What do they have to actually do practically on the ground? Are they just like hounding the CFO and saying, okay, every week explain this to me? So what's the best way to actually learn it, you know?
Well, ideally, your company will have a dashboard that, like, if you have a Monday morning leadership meeting, they pull it up. I would dig into those metrics, not just to say, like, do I understand what net dollar retention is? Like, okay,
Mm,
that might take a while. It's more to say, what are the levers that we care about in this model? Because at the end of the day, like, people like to act like finance is complicated, and it can be, but it's really price times quantity in anything that you do. And if you look at that dashboard and you can get those levers down to price
yeah.
times quantity, I think like CTOs or engineers who are very smart people, like they'll be able to figure that out.
Yeah. Yeah. What about this aspect of like the language of finance and learning that, like how should a CTO go about doing that? For example, and maybe you can clear this up, but things like CapEx versus OpEx is a perfect question
Oh,
that comes up all the time. Can you just like define that for our audience and then maybe comment on like how should a person learn that type of stuff?
yeah. I mean, like from the perspective of the company, like both are just spending money. It's money leaving your bank account and going to somebody else's to buy it. But the way that
Yeah.
financial statements are prepared in what we call generally accepted accounting principles, GAAP, you can either put costs in an OPEX bucket or a CapEx budget. An OPEX budget means that it reduces your profits on the profit and loss statement, which means that it goes into your expenses. And that year, it'll show like your revenue less your cost of goods sold, less your expenses is your net income. It reduces your net income and basically how much each shareholder would get per share after theoretically. And so that's like a hit today. It's every
Hmm.
year you have this operating expense. So like if you
Right.
pay for like, I don't know, let's say you use Calendly to schedule meetings and it's $15 per person. That's a simple OPEX, right? CapEx is it goes on the balance sheet first. So it's going to land on the balance sheet before it lands on the profit and loss statement. And the benefit of that is you can do what they call depreciate it. So you determine what the useful life is. And let's
Mm,
say you bought something for $100,000. The useful life is 4 years. If
right.
it's what they call straight line depreciation, I'm now taking the $100,000 I had in the balance sheet and taking $25,000 off, transferring it over to the profit and loss statement. So that was a lot of numbers, but it's basically how much does this how much does this impact the results that I have to show in year? And so
Yeah.
there's always been this debate of like OpEx versus CapEx, which is better. And I think the pendulum has largely swung both ways. I can give you my opinion on where it is now, but I
Yeah,
don't
that
know
would
if
be
you want to.
amazing. Yeah, no, I think that'd be great because it seems like everybody has a different thought about it. But yeah, what's the latest?
There was like a huge push in like I would call like the 2010s to move as
Mm,
much as you could to OpEx, right? We saw the SaaS boom. So like everything that was like infrastructure that we capitalized, now was infrastructure as a service, which meant it hit the
hmm
P&L. Now I think it's actually swinging in the opposite direction. So I was talking to a CFO last week. His company sells a security product, has a small hardware component to it. He was having these Fortune 500 companies ask him to say, hey, can you help us for the auditors put this in the CapEx budget? We'll actually pay you on this 5-year deal. We'll pay you for 4 years, 80%
mm,
upfront cash. And he's like, who am I to say no to like millions of dollars of
hmm
cash today? But they're doing it because they think their shareholders will be more receptive to parking this in the balance sheet and
Yeah.
amortizing it over time.
Okay. So CTOs who are thinking about how the sort of the finances work with relation to this kind of stuff, there's an element of like sort of subjectivity and, as you said, different trends, right? So this APEX versus CapEx now move more to the CapEx side, but before 2010s, you were saying on the OpEx side. That's interesting. So it's not like a hard and fast rule. What about like just this learning the language? Have you seen CTOs who have gone from not knowing much about the financial side of things to like being really good at it? And like how long did it take them to get fluent?
Some of them pick it up really fast because I think incentives drive outcomes. And if it means that you can get more resourcing. So to use the CapEx versus OpEx
Yeah.
example for this question, Bobby, I had a CTO who very quickly figured out that meant there were two budgets, right? I gave him his OpEx budget for the year with his employees and the software they could buy.
Yeah.
He quickly figured out, well, CJ actually has a CapEx budget that I can tap into. And so the incentive there was for him to come and speak my language and pitch it to me for this data center build out that was actually going to come from the CapEx budget. So
hmm
I think people can get up to speed pretty quickly once they realize that it allows for better resourcing for their team.
Yeah. Okay, great. One thing that I know has plagued a lot of my CTO colleagues over the years is just this idea of technology investments and their impact on the finances and how to think about them in like the right way. And one obvious lens is a capex versus opex, but what's the best way for somebody in tech to sort of like think about the business case of tech investments that don't necessarily have a direct impact on something like sales and growth or even like margins and things like that, efficiencies. So for example, I'm thinking about something like, well, we have a lot of technical debt and it's really slowing down the developers, and maybe they don't have some kind of like clear metric for the fact that development is being slowed down, but they just know that the technical debt has to be cleaned up, and they're coming to you and they're like selling this idea to you. How should they go about doing that? Because I've seen a lot of CTOs fail at that, and it's not as easy when it's a sort of deeply technical project that they're trying to make a business case for.
So this is how I would pitch it to me. I would say, hey, CJ, correct me if I'm wrong, but it's easier to keep an existing customer around rather than having to spend to go get a new one, right? I'd be like, yeah, that totally makes sense. And then they would say, well, in order to do that, we have to keep them happy, which means that the product has to work. There can't be bugs in it. And we can't have customers who are churning because we're basically not keeping the lights on for them. And I'd be like, yeah, that's totally right. So I would pitch it to them in the sense of there are new products that we can bring to market that are going to allow us to acquire new customers or to upsell or cross-sell existing customers and get more revenue out of them. But we need to make sure that our renewal rate and our gross dollar retention, which is basically how much of the current dollars we have can we keep in the boat each
Yeah.
year, how do we keep that up? And I think it's even more important than it used to be 2 years ago, Bobby, because I'm seeing in the
Hmm.
benchmarks, companies are relying more and more on existing customers to fuel their growth, compared to years
Yeah.
past where you could go out and acquire customers and people wouldn't care about your cash burn.
Right. Yeah, that's, I mean, the way you traced it from the project to the business is perfect. I think a lot of CTOs struggle with that. It's definitely like early in my career as well. I was started off as an engineer, and then like I was lucky to work with a CFO who kind of explained the language and how to make a business case. Um, what's the right, if you have a business that's like, let's say a smaller mid-market business that's 30, 40 million bucks, what is the size of the project in dollars that you would say, you know, if it's above this amount, we need a business case for this?
30 to 40. I would say anything that is more than 5% of our total OpEx for the company.
Yeah.
Maybe even smaller than that. But like I probably wouldn't even start the conversation there with them. I would say, listen, 70% of the cost of this company will walk on 2 feet, right?
Hmm.
Let's go through where the engineers are spending time. So there's 100 percentage points to go around. Can you help me bucket this into keeping the lights on, upgrades to make stuff we've already
Yep.
built better, and
Yep.
then net new stuff that we're going to launch at some point.
All right.
And ideally, if I'm in that 30 to $50 million range, I'm hoping that 50% of that spend is on net new. You run
Hmm.
into a problem where you have all this cholesterol in your arteries and you're spending like 30% on keeping the lights on, to your point.
Right.
And then that brings up a different discussion.
Yeah. Or so many businesses just even more than 30%. I've seen organizations that barely spend anything on like new innovation, and like they'll do a little thing and say, okay, well, this worked out really well. It may or may not have, but like they're spending most of their time and effort, if they really do an analysis, on KTLO, keep the lights on. And yeah, it's like when you go in, part of my job often is like go in and really analyze that KTLO bucket and try to figure out like how much of this we actually need, and what can we transfer over to enhancements and new features and things. And there's usually a lot there that's like fodder for use elsewhere. Um, I always find that like when you're thinking about like business cases for a company that's in that 25, 30, 40 million dollar range, that like 500K is like, if you're doing a project bigger than that, you got to come to me with a business case. And it just like feels like the right rule of thumb. And it also, in my experience, helps the CTO to learn how to do business cases well, because a lot of them don't come with that skill set. Do you have like a specific format, or do you have some basic foundational pillars you like to see in business cases when somebody says to you, "Hey, I want to do this new amazing product. You know, this is a cool thing. Oh my God!" And there's nothing really written down, but we need that business case. What should go in that business case, in your opinion?
I think it should be bound by a dollar range and a time range, and trying to the best of our abilities to get to what I call an R&D payback period. And so
Hmm.
there's what you call a CAC payback period in the sales side, which for those who aren't familiar, that's your
Okay.
customer acquisition cost. Basically, how many months it takes if you spend $100 to go and get customers, do they pay you that $100 back in 6 months, in 12 months, 18 months? If it's a company that's between 30 and 50 million in revenue, I'm hoping that within 18 months we've completely paid back what it cost to develop that,
Okay.
through either increasing the wallet share of existing customers or being able to go and acquire customers that we couldn't get into before. So I'm not only looking at how much it's going to cost,
Yeah.
I'm thinking about what's the potential, the revenue potential over the medium term and long term. And
Right.
then also, I think what like is missed in these conversations too is like the strategic rationale of like, what does it do to our total addressable market if we do this? What
Mm.
category does it put us in?
Right.
Because like my job is just as much narrative as numbers, right? I have to pitch
Hmm.
what these investments are unlocking for the
Yeah.
future potential of the company, especially if it's private equity owned, because like there is a hold period on that. And the next buyer has to believe that what we're putting money towards today unlocks a bigger world for the next
Hmm.
period.
Yeah. Um, That's a great point. Related to that, like let's say you're a CTO and you're bringing like a new innovation business case to the CFO, what is a good multiple that needs to be part of the business case where the CTO or the CFO might think like this is a no-brainer. We have to do this. Does it have to be 10x? Is 3x good enough? Like, what's good? What's a good multiple for like a project on an already existing platform, just a new feature or something?
I think like minimally 3x just to start the conversation, because back of the
Yeah.
envelope, I know that my shareholders are expecting that from me. Where the convo gets more nuanced is, does this help us retain customers that we were losing before, right? Is it loss
Mm,
aversion? Does it
yeah.
help us like bridge the gap with another product that we get revenue over there? So maybe like you build something that like doesn't make much and you sell it at cost like as a SaaS product, but we're adding payments to this. So over
Yeah.
time, like it opens up a bigger opportunity. But I
Hmm.
would say like generally speaking, we're not in the business of building stuff that's going to return under 3x.
Right. That's great. That's a great tip. When you think about the difficulties in business, building a business case for anyone, not just like a CTO, but anyone who's doing a business case, you're always in a little bit in that mode of predicting the future. And what I'd like to know is your opinion on like how a CTO should best go about predicting the future, because chief product officers or CTOs, they don't know if customers are going to come to that new product they launch. They have no idea what's actually going to exactly happen. So, what kind of mindset should they have about the R part of ROI? Yeah, they can figure out the investment accurate, the I part of ROI pretty accurately. But what about the R, the return on investment? You have no idea about 1,000 different things. Is marketing going to do their job? Maybe sales won't want to sell it. I mean, like the market might tank tomorrow. What should their mindset be when they're trying to present a business case about a thing that hasn't happened yet?
I don't think like it all has to fall on your shoulders about getting that right. But what I do think helps is historical context. So the best CTOs that I've worked with, Bobby, can explain like, oh, well, we went from the like on-prem era to the desktop era, then mobile came along, and then cloud-based, and like they can frame it in the perspective of like there are these waves, and if we do this, we get to ride this next wave here.
All right.
Whether that wave happens or not, like I can't put that on your shoulders, but you've articulated to me that you understand where we came from and how it's positioning us as a
Hmm.
company to not just like have a great product, but like bad timing. I think a lot of this comes to like, let's just have a discussion of like why now? Like I know you have the
Hmm.
capability to build this, but there's also the why is now the right time to do it?
Right. Yeah, that's great advice. It's not all on the CTO shoulders. Yeah, you should think about it more broadly. I think work with your partners in sales and marketing and really get a holistic picture, especially if it's like a big investment or whatever. Okay, that's awesome. CJ, I also wanted to ask you about, having seen a lot of like sort of tech investments going south.
Yeah.
Um, it's not always guaranteed that your product or technology investment is going to work out. Like, what kind of stage gates do you like to see? Let's say, for example, it's a $30 million company. They're spending 20% of their revenue on R&D, and they have like a $3 million brand new project. It's been approved by you and the CEO, and they're underway on it, and it's like a 2-year project. Do you like to see stage gates quarterly more often than quarterly? Should there be like a almost like a daily report? I mean, like what would you want to see as far as like to mitigate risk and make sure that you're checking off the milestones in the right way?
Yeah, I would want to know how many people are deployed on the project at pretty much any month, because that helps me figure out like just directionally how into this
Yeah.
are we and how full time are they, because I understand just like ramping a salesperson, it takes time to ramp teams into working on this, and then
Yeah.
I'd want to on a quarterly basis check where we are against the roadmap. I do think though, like stage wise, let's say you're a sub $5 million company, we're willing to underwrite a lot of technical risk, right? Like because we don't have anything to protect at this point. We need to build something that's new and innovative, and that's just like why we're in the game. If you're a
Yeah.
$500 million company, like we should be underwriting more execution risk than technical risk. Like we should be building stuff that we're pretty damn sure we can build at that
Yeah.
point, because we do have a lot to lose. And so
Yeah.
that's the conversation that I like to have, because like it's like Maslow's hierarchy of needs. Whenever you think about like preserving your cash, like at first, like you're just trying to stay alive. You need food and water. You need
Right.
to invent something. But by the end, like, and you get higher up as a company, your appetite for risk adjusted bets, I think, shifts slightly.
Yeah, I think that's a great point. Do you think that like when CTOs and product leaders, when they're building these business cases and they're starting to execute on them, um, how should they keep track of the changing aspect of the business case? Meaning, like, oftentimes our part of a technology project will stay the same from the beginning to the end of the project, but the investment will change. One example is your CTO, you pitched a project, got approved, you realize midway through you need 300,000 a year architects to get it done. You didn't, and there was something new you learned about the technology or something like that. How should the ELT or the CTO and CFO keep track of new expenses that pop up out of nowhere sometime in these tech projects? Is there easy, or is there a framework for doing that?
Well, ideally, you have an FP&A partner, financial planning analysis, who's checking in with you every month. So, like, these surprises shouldn't be like massive surprises that you're dropping on the table. Like, $5 million project actually going to be 15. It's like if you have an interior designer, that's probably how you feel. But like you should be checking in and having a dialogue on an ongoing basis about those things. So it's more of a slow ramp if costs are going up, not
Yeah.
just dropping a bill on the table and saying we got to change this. But you zigged, so I want to zag there. I think what CTOs forget to check in on is the state of the overall business and other stuff that may impact their projects. You may be building this thing right on time. It may be exactly
Yeah.
what we wanted. It may be on budget. But what happened if the market shifted and like our core product is underperforming? Or even better, what happens if the other stuff we sell is doing so much better and we're learning from customers that we have to build something else? So
Yeah.
like that's all to say that you're budgeting for your project, but your project isn't happening in a vacuum. There are other external factors that can impact how much more or less we should put into it. And I think like any good organization, an innovative organization, reserves the right to change course if it's better to do so during any project. Like there has to be
Yeah.
some element of like understanding sunk costs as well because of
Yeah.
external factors.
Yeah. That's a great point. Is there, just related to that, is there a way that you recommend, or how should technology leaders think about the constraints on a business? So sort of typical tech person, I think if they learn the business model, that's amazing, that's great. But there's always some constraints that they're dealing with their company, and sometimes they're almost invisible to the technology person. you know how does a tech person kind of figure those out? Like one thing I've done in the past is like, all right, just keep a cadence of talking to the CEO, the CRO, the CFO, just all the top leaders, to slowly start to understand, like, okay, this is what limit, these are the five things that limit this business. And is that the right way? Is there some other way to just know these sort of external constraints on the business?
Yeah, and you should ask your CFO like, "Hey, are we burning cash or are we profitable here?" Like, okay, that's a pretty good baseline. You should ask, I know we have investors, right? Uh, that means at some point there has to be a liquidity event. Are we close to that? Are we
No.
far away from it? Because that'll also dictate how many like longer term investments you're willing to make as a company. And then I'd give you three metrics just to check up on. And it doesn't mean like it's not necessarily like the metric itself. It's more the trend of it over time that you should be concerned about. So the first one is your CAC payback period. So ask the CFO, is that getting better or worse? Basically, are we able to acquire customers and bring money into the business at a faster rate, more efficient rate than before, or slower? And then you should ask about, if you are burning cash, your burn multiple. So that's the ratio of new business you bring in relative to how much cash you're burning. So is that becoming more
Yeah.
efficient? And then my favorite, I call it the GOAT of metrics, greatest of all time, is your revenue per head. So as an organization,
That's a
are we
great one.
getting more revenue per person every year or every quarter compared to where we were before? Because I think that shows the direction that you want to go in.
That is awesome. Those are great metrics. Speaking of metrics, when you're a technology leader and maybe you're in a private company, the sense of ownership and responsibility about finances is a little bit different, I think, than when you get into a PE-backed organization, and maybe the sort of not just the financial reporting, but the controls and so forth are more stringent, more intense. What should a CTO do to sort of like make that transition where, I mean, I've been a CTO of a PE-backed firm before. All of a sudden, you're like a mini CTO about your department. Obviously, you have the CJ you're still reporting to, but then you're having conversations with maybe operating partners or other PE people about all sorts of intricacies of your budget and so forth. Are there any recommendations that you would make to switching from private company mode to PE-backed mode?
Yeah, I think you have to ask, and I think they should like that you're asking this. What's the value creation plan here? And in venture capital, like, you're hoping that you can build something that people want and it's going to be a big outcome. In private equity, you're doing something for the most part that is a more known challenge with a tighter band around the forecasting of what the outcome is going to be. And in order to get there, the investors have underwritten what they call like an investment thesis. And that's the things that you're going to do along the way to go from point A to point B. And they should be willing to share that with you, because like, you don't want to be thinking that we're going to go into consumer when you're going to continue to be a B2B business. And you don't want to think that we're going to launch 2 products a quarter if you're going to launch only 1 new product and you're going to mine the install base. So that just shows that, like, especially if you have equity in the company, which many of you do, like, it just shows that you care about being on the same page as them. And it allows you to ask better questions along the way when you're deploying the people on your team.
Yeah, I think you nailed it. I think the biggest thing I would recommend is like go figure out the investment thesis first. That's a critical piece of it. And then every PE firm obviously slightly different. So like, what do they care about in the near, short term, medium term, and try to align yourself to that. Private company obviously a little, quite different. PE firm suddenly very much like get yourself used to reporting also more frequently. Monitoring, tracking, reporting, I think generally tends to go up. Speaking of PE, when let's say you're a CTO, your company just got acquired. As soon as I've seen this happen so much, as soon as you get acquired, you pretty much right away start hearing the word exit become talked about whereas before it wasn't a factor. How focused should a CTO be in year one on exit related considerations, given the fact that they're just in year one? The whole period could be 5 years, 6 years, 7 years. They may not have an exit for a long time. Should a CTO be thinking about exits from day one?
Yeah, as a venture-backed or private equity-backed company, you're essentially always for sale. Like, by definition, someone could come in and buy you. So that doesn't mean like you can't innovate and bet on things, but you have to do it in a calculated way. So like, you know what you're signing up for. You can't think, well, it's a 5-year out problem, because somebody could show up with a term sheet at any point and you want to have your backyard in order and you want the sheds to be swept. So I think you always have to have it in the back of your mind.
Yeah, 100%. I mean, it becomes a part of your life basically the minute that you get acquired. What about stuff like doing bolt-ons and acquisitions and things like that? So you're a CTO, maybe you've never done one before, and then all of a sudden the PE guys are like, we're doing a bolt-on. and you acquire a smaller company, and they want you to not just integrate the dev team and the products and all that stuff, but they're also like, hey, yeah, redo your whole budget and stuff, you know. Is that just something you learn just by doing it? I mean, certainly for me, I was pretty young when it first started happening. There was nothing I could read out there. I just did it and then learned. There was no mostly metrics out there at the time. But any advice for CTOs doing like first time bolt-ons?
My biggest piece of advice would be don't wait until after the deal is closed to figure out the org chart, right? Like I said
Okay.
before, 70% of your costs are people. People are a lot messier to deal with than software. And you got to figure out, especially if you're acquiring a company with a founder, where does the founder sit? Are they going to be happy with what they're working on day to day? Is this going to be a standalone business unit? Are we going to sunset some of this product and some of the people will be impacted by it? So the first
Yeah.
thing, like before you even think about like what's going to happen in my code base, is where are the people going to go as part of this?
Yeah. That's a hugely important in insight. You know, one of the first things, this word I heard back in 2012 or 2013, synergies, the first time I heard that word in a certain kind of way. And when I first heard it, I thought, wow, what a great and positive word. You know? And then slowly I realized what it actually meant in the world of private equity. And and you know, a lot of CTOs are tasked obviously with like go and find this many synergies, you know, this much savings. Um, and if you're not used to it, like when you first do it, you're just like, huh, where, what, how do I do this? And so many things back 10, 15 years ago when I first did this ran through my mind, like, who am I going to cut? You know, that's a horrible feeling. What systems am I gonna cut down? You know, how am I gonna make processes more efficient, and so on. When you think about synergies, you have an acquisition or a bolt-on or something, and you're thinking about the synergies. Is that something that you feel is just a part of being a CTO, right? It's just a part of the job, and if it's in private equity backed businesses, you have to find synergies all the time. That's what I've found, at least. But do you have any thought on that?
I think it's part of the game. I also think that there's always the opportunity to show how doing something helps you go faster or how it elevates someone who may have been hidden in the org before. So I've been a part of a
Yeah.
lot of bolt-ons where we had some people who were maybe B players and they'd been at the company for 10 years and they were pretty well along in their career and there was somebody underneath them that could shine. And it was also nice that they honestly didn't cost nearly as much, but they were able to step up into that opportunity and give a new perspective on what we were building.
Exactly.
So like,
Yeah.
I mean, there is like the hard people element of it, and I don't think you ever fully get over that.
Hmm.
But there's also the positive element of like who gets an opportunity to come out of this and build a better career and really life for their family.
Yeah. Yeah. Exactly. Well, it's, you know, you get into bigger and bigger bolt-ons and acquisitions, and synergies start becoming into the millions, and you're trying to figure out which places to cut. And um, I built my own framework for that. I try to use that framework. I mean, it depends on what kind of synergy you're talking about, obviously, but like it's I've seen some CTOs wing it, and it's not a good result because you were sort of alluding to this point is tie the synergies to some future business outcome, and then it'll make a lot more sense, you know, as opposed to just saying, well, I guess this department has to go away. You know, you really have to align yourself to these objectives, business objectives.
Yeah, and I
Um,
think like
yeah,
the same way you don't pay an NFL running back for the yards he gained last year, you're paying based on the future prospects of what you can generate together. So it is, some people think that's a cold, calculated view of the world. At the end of the day, though, you're trying to create a value creation plan going forward that puts the company in a better position so the people there can benefit, which does take a lot of hard conversations. And I found the best way to get around those conversations is to be incredibly honest, incredibly thorough, and not wing it, and show that a lot of thought was put into it. And if you do
yeah.
have to make cuts, ideally you make them once. So you don't want to, what's the saying? Cut
You want to
twice,
rip the
measure once, or
band-aid?
something.
Yeah.
Yeah, like, and people say rip the band-aid off, but I think that that makes it seem like you're rushing to a judgment of maybe something like, I
It
don't want to put up
does.
with
Yeah.
the emotional part of having to go through this
Hmm.
change. But
Yeah.
like the ultimate thing you can do for somebody is to actually think through and do everything you can to keep the people on board before you have to do that.
Yeah, exactly. But that like whole process I've seen people do of like, death by a thousand cuts, a little bit there, a little bit here. Yeah,
That
that's
kills
hell.
morale. You can't
That
come back from
destroys the
that.
company. I mean, it's so bad. A lot of people don't believe that it's bad, but then they do it, and then it is very, very bad. I mean, it kills the trust and all that stuff. Now, another word that comes up when you think about getting into a PE backed business as a leader is valuations, like multiples and valuations upon exit and all those types of things. And how much should a CTO be thinking about that? And also, what can CTOs do to drive higher valuations and multiples?
Yeah. So, like I said, part of it's the numbers and part of it's the narrative. So, the best storyteller, who's a CFO that I've interviewed on my podcast, is Eliran Glazer, the CFO of Monday.com. And
Hmm.
you remember the numbers he gives you, but you also remember the way that he made you feel when he told the story. And a lot of that is talking about the category they've invented, which you need the CTO to opine on and help you design, the roadmap of where they're going and why they're well positioned with what they've built and what they're investing in to capitalize on that. So I look
Yeah.
at the CTO as like my right hand in terms of like, dude, you gotta help me fill in the gaps here. I have numbers, but those are just characters in the plot. It's a larger story that our valuation will be predicated upon.
Hmm. That reminds me also scenarios where you get into the last few years of the hold period and the investors want to sell and they need something new and interesting to get future buyers excited about. And so they might ask the CTOs, hey, do something innovative using AI these days or machine learning or something. I think CTOs have to answer that call a lot related to the exit and valuation. I also think just like buttoning down and just cleaning up the budget and getting things as lean as possible was a big ask that comes from investors, right? Those things always seem like CTOs got to go do those things. A third one, I wonder what you feel about this, is like the protectability of the IP, the patents. Like, is there a
Oh,
moat?
huge.
Yeah, isn't that a big deal?
Oh, I've seen deals fall apart because you find out that like a third party who designed it owns the IP, not you. So that's always something to make sure that's completely buttoned up, and also explaining the code base, what languages it's written in,
Yeah,
when it was
yeah,
written, who designed it if they're still with the team,
yeah,
and then what technologies it connects to that you don't own. And if you have sometimes you'll do deals with companies through API agreements, and it can have a blocker or a waiver that they have to sign in order to sell.
yeah,
So understanding that is huge because that can really derail the
yeah,
process.
yeah, absolutely. CJ, have you ever gone through sort of going back to some of the earlier questions around these big projects and things? Have you ever worked in a situation where you really had a CTO who was wanting to build something, but the right answer was to buy it, or like vice versa? Have you seen those kinds of scenarios before?
I actually was in a scenario where the right answer was to not build anything at all, which was completely counterintuitive. So the last company I was at, we were a marketplace company with a SaaS component to it.
Mm,
We served auto garages, and we basically were like the Amazon for them to order the parts to fix the cars that came in. And we were at a point in our whole period where we knew that our investors were going to have to get an exit at some point. And there's this funny mental game. It's called the next buyer's theorem. So the next buyer has to think that they can do something to the business to make it worth even more because they're so smart, which they probably are, and
hmm.
they can add value to it. So in other words, there's still meat on the bone of something for them to do. And we were thinking about adding payments to our product. This
Okay.
would be like payments, that's like at least a 2-year journey with the investment you have to make.
Yeah.
We didn't even have the right people in house yet to do it. And we said it would actually be more valuable to our narrative if we said it was on our roadmap and we had done our due diligence to show how big of a market it was and what it would do to expand our current product. But it wasn't the right choice to build it now. So the story was actually more valuable than trying to go out and invest and do it ourselves at that very moment.
Yep, that's a fantastic. That's what a good example. I find there's so much that CTOs want to build, and they're biased, and I'm one of them. But typically, is build over buy or partner, and for a lot of different reasons. But like just the way the world is moving, I think most CTOs should try to be more balanced about it. And there's also there's also the scenario where do nothing. To what you were alluding to. So, okay. Thank you so much, CJ. I think we're at the end of our time. Really it was really a pleasure talking with you today. Obviously, meeting with the person behind Mostly Metrics has been amazing. Tell everybody how they should reach you, because you have the two newsletters and the podcast. Can you just tell everybody the names of them again?
Of course. This has been a blast. So you can go to mostlymetrics.com. It's not just for finance people either. It's for anyone who wants to learn the language of a CFO and how finance, strategy, and ops can superpower the other people at the company, sales, and the people that build the product. And then the podcast is called Run the Numbers. You can find those. Nice. And then my other newsletter, Looking for Leverage, which is private equity focused, just if you go to mostlymetrics.com. So it's free. Check it out, and I hope you like it.
Yep. That's awesome, CJ. Encourage everybody to check it out. And I'm sure our listeners will have taken a lot from this discussion. So thank you to everyone for joining. And I'll see you next time on the Technocratic Podcast. In the meantime, keep the sharks swimming.